Right. Welcome, guys. Part 2, MT4 use. I'll start on the basics of using the MT4. Right. This some of the features that are on the MT4 for the computer are not available on the MT4 for mobile. All right. So just take note of that. Okay. When you log into your MT4, obviously you will not see it like this. It usually have the line chart to put in your candlesticks, right? Which we use. We will look at them when you look at the technical analysis. We'll look at candle anatomy. We'll break down a candle. When a candle is like that, what does it mean? Okay, so we all default, we use candlesticks. We don't want to use the bar chart. We don't want to use the line chart. All right, we use candlesticks. So when you open a new window, right, let me just do it. You right click that window, right? Your window will appear. All right, we don't want the window to be like this. We want your candlesticks. So you go to chart, right? Chart, and you use candlesticks, or you can use this shortcut, the keyboard shortcut out. So when you click on candlesticks, and then your candlesticks will come. All right. So I'm zooming out and in. All right. I'm using buttons on my computer, the plus button and the minus button, so I can zoom out and in. However, for you, you can use my MT4 is you can use these buttons, zoom in, zoom out. Usually on the default MT4, there will be somewhere here, these buttons, so you can zoom in or you can zoom out, but I'm just using my buttons here. All right. You can also change, you can personalize your candlesticks. All right. Traditionally, I like my candlesticks to be like that. The bull candle to be green and the bear candle to be red. They give me a nice visualization of what's going on. All right. I don't mind much about all these lines in there. I use them for my for analysis, which we'll look at later on. All right. So when you want to customize your candlesticks, let me go just back to the last window. Right. You can open an unlimited number of windows down here of currency pairs, which you can flip through. They will be down here. All right. Right. So one mistake that I think I should highlight now, right? Always make sure when you do your analysis, when you want to enter into a trade, take note of the time frame of your candles or of your graph, right? When we say this is a 1 hour graph H1 or here H1, what does it mean? It means that, let me use one with candlesticks. Let me input candlesticks, just a minute. All right, the candlesticks are here. When we say this is a 1 hour chart, it means that this candle here, it is showing us the price movement during this during an hour, right? Right. This candle here is showing us the price movement on this date here, the 19th of January, and it was from 10 in the morning to 11 in the morning. This candle starts from 11 to 12. This from 12 to 1, going like that. So the 1 hour chart, it means each candle represents 1 hour, right? When you come back, when you come to 30 minutes, right? Each candle would I think my internet connection is a bit slow. Each candle would be representing okay, sorry about that. But the basic point is that each candle will be representing 15 minutes, 30 minutes, and here each candle will be 15 minutes, 5 minutes, 1 minute, as the case might be. A common error that I used to do during my early days is maybe I would make an analysis on the 1 hour chart, all right, and then I would want to use this 1 hour chart to enter a trade, which is wrong. Generally, we use the higher time frames to get an idea of the trend. Sorry for my internet, it's acting funny. But the longer time frames give you an idea of of the trend, right? You can then use the shorter time frames to look for the best entry point. Shorter time frames, they give a bit of a distorted view because it's like they use an average over a small period of time, and those averages, they can be misleading. So you may make your analysis on the 1 minute chart and enter a trade, which is wrong. You need to make your analysis on the longer time frames and then use the shorter time frames for entry points. I don't know if I'm making sense there. Always make sure you take note of the time frame of your window, because making a wrong calculation, making a wrong assumption, analyzing a 1 minute chart and using that information to get into a trade can get you into big trouble. You need to take note of that. I cannot stress it enough. All right. So going from there, you can customize the candlesticks by coming into this window. You right click, right? When you right click, you come to properties, right? When you come to properties, now you can personalize your window, your candlesticks and their colors. For example, the bull candle, I would want it to be green, right? And the bear candle, I would want it to be red. So just like that, you can customize. So you can use almost any color that you want, and that'll be all right. Okay, here we have the market watch window, right? We have the market watch window, and on this window, this is where you get the pairs that you want to trade. At times, only a few number of pairs may be shown. Like I showed you into that other video, when you right click and you click show all the currency pairs that are available there will be shown. All right. Right. When a chart like this, right, it is customized. I've put in my indicators there so that I can analyze. And choose to see whether there is a signal and if not, right? So you can save a template. When you say you can save a template, your basic chart will be like this one, right? It's just, you've just turned it into candlesticks, right? There are no indicators there. You haven't input anything, and you can set your candlesticks you can insert your indicators or lines or whatever. All these, you can insert them into your graph as you want. All right, and then you can save your template for future use instead of trying to input these settings. Say for example, I'll just run a quick example here. Let's say I want to put in a moving average line here. All right, it would be right like that. When I click OK, you see this line there, it has come in, right? When you want now to move on to the next pair, right, that line is not there. All right, instead of manually inputting it every other time, you can save the template on the window that you'll be on. You come here, you say save template, all right, and then you give your template a name, and you can say test, and then you save it. All right, after saving it, when you come to the other window that you want that template to appear, you just right click in the trading area, you go to template, and you go to test, and it will just be like that. So you don't have to manually enter for each and every other window. You can just save templates. All right, I hope I'm going good. I can't see the chats now because I'm explaining, so maybe you can just type your questions, and if you have any, and then I'll attend to them after I'm done. All right, then this terminal down here shows your trade. Like I was saying the other time, it shows your trade. For example, let's just take a random trade here. This is a demo account. All right, new order, sell. All right, I think it's my connection that's stalling there. Right, finally it's done. Right, so you see your trade here. At times this window may not be there, or at times, especially when I do my analysis, I want my full screen so that I can really see how my pairs are doing. You can close them, these windows, so that you can have your full screen and you can really analyze your pairs. You can really see what's going on there. When you want you see your windows back, you go to view, and then you can go to terminal, and your terminal comes out. All right. Then you can use the keyboard shortcut, which is Control T. All right. Then, okay, there's a chart here. Then there's something I want to show you here. When you'll be using the MT4 on a computer, there's this feature here called a trailing stop. Right. What is a trailing stop? A trailing stop, what it does is it automatically moves your stop loss. Now I think I have to explain stop loss as well. All right, stop loss is a period that you can put in to say if the trade goes against me up to a certain level, if it reaches this level, I want to close the trade. I'm accepting the loss. I don't want to incur further loss. All right, which we don't use it with our strategy, with our signals, because we know they will always turn blue. All right, so now when you use trailing stop, what it does is it moves with, let's say the trade is going your way. It has gone your way 15 right now. These are minus 17 pips, right? If the trend is going your way, now let's say you have this plus 17 pips going into your direction, you can come and put a trailing stop of 15 points or 15 pips. What does it mean? If the market continues to move in your direction, right, this trailing stop will move with the market. It will always be 15 pips behind the profit, right? Trailing stop is used to lock in profit. And now when the market moves back against you, you will not lose all the profit that you have done, because let's say the market moves 100 pips in your direction before going back, and you have put a trailing stop of 15 pips. What it means that when you are at 100 pips profit, your trailing stop would have logged in 85 pips. That is 100 minus 15 equals 85. Those 85 pips, you are guaranteed of having them. So when the market starts retracing from the 100 pips going backwards, your trailing stop will hold at the 85 pip point. And if it goes, if it hits, then the trade will automatically close, but you would have locked in your 85 pips, right? But if the market continues moving in your way, say from 100 to 115 pips, then the trailing stop will move from 85 to 100 pips, right? And then it will keep on following. It will always be 15 pips behind your your profit, the number of pips that you have. So it's a way of locking in your profits and trying to maximize what you can get out of the markets. All right. So the trailing stop, it goes all the way. You can customize it. It goes all the way to 50 pips, or even you can customize it. If you want it to be 200 pips behind, it's all up to you. But the higher the amount of pips you put in your trailing stop, the more you sacrifice, because the number of pips in your trailing stop, you will sacrifice them. What do I mean? I mean, if the maximum number of pips you could get was 100 pips, and your trailing stop is at 15 pips, you get 85 pips out of that trade instead of the 100, because the market will always move back. You get out of the trade when the market moves back and hits that trailing stop. So if you put a trailing stop of 50 pips, it means at the end of that trade, you are sacrificing 50 pips unless you manually close that trade. I hope I'm making sense there. All right. So that's that about that. If you want to close your trade, you can manually close it. You can right click there, then you go to close order. Your trade will be closed. Then when you come to profit here, you can show your profit as deposit currency, as the currency used. As you can see now, my lot size is 0.01. So there's basically no difference between the showing your profit as points or as deposit currency, because each pip is standing for a cent. But now if I was using, maybe we can just take a test trade. Now I want my market watch window. I have closed it because I wanted the full window to analyze my chart. If I want my market chart window to come back, I can go on view, then I go to market watch, then it comes out like that. So I want to go to new order, right? And now I want to use 0.05 so that I can stress again this issue of pips. Right, I hope my connection is all right. All right, beautiful. All right, so now you see, this trade, I'm just minus 46 pips, but in dollar terms, I'm minus $26. Shows you the power or the effect of lot size. Right. In this trade, I'm minus 44 pips, but I'm minus 44 cents because 1 pip, 1 cent. Here it's just 15 pips minus $20. So here, if you show your profit as the deposit currency, you will see it's just $20. But when you show it in pips, in pip terms, they're just 16 pips, 15, 16 pips. So yeah, you can change and see your pips, your profit in pips or in profit terms. All right, then you can use this thing here called the crosshair to analyze your charts to see. For example, you click on it, right? When you click on it and you come to your window, it will start moving around, showing you the price level, showing you the time level at the bottom of the chart as well. And you can calculate, let's say, I want to calculate if I had entered this trade, if I had bought this pair at this point, I right click, all right, let me redo that. I come here, then I left click and drag. I'm holding my left mouse button as I drag, and I can see what it is showing me there is that there are 3 candles. The first 3 there is showing me that this period is covering 3 candles, and there are 79 pips difference. There is 79 pips. The market moves 79 pips from that point, the bottom point here, this point here, to the maximum point here. If you take it higher, it will go there. There will be 100 pips, etc. So these are the other tools that you can use when you are doing your analysis, when you're trying to set your targets, when you're trying to put in. This one is a horizontal line, which you can put into, maybe you're doing support and resistance. We are going to have that lesson to me. The next lesson that we have, it will be about trading support and resistance. So you can put in your line on your support and resistance and see how it is going. All right, for now, I don't know, maybe I can entertain questions and see if there are any questions, if there's anything that you want me to explain on this MT4 right now. Right, you can close your trades by just clicking here and clicking there. My network is just bad, that's why they're taking a bit long to close, but they're supposed to close instantly. Any questions, guys? Any feedback? All right, thank you. All right. Okay, Rangare says, what's your recommended trailing stop? What I do with trailing stop, what I do with trailing stop is I usually use around 15 pips when I'm monitoring the charts, all right? Because when I get to around 50 pips, I want to lock in around 35, so I use 15. And then when the market keeps on moving in my direction, maybe when it gets to 100 pips, I want to lower my trailing stop. The problem with the trailing stop is that markets, the price can move back and hit your trailing stop, and then just soon after hitting your trailing stop, it continues in your direction. So it can stop you out and then continue if you set it too low. Right? If you set maybe a trailing stop of 10 pips, the market may just move back 10 pips and hit your trailing stop and then continue moving in your direction. So there's a fine line there. If you set it too close to your profit, you increase the likelihood of you being stopped out. If you set it too far away from your profit, you can follow the trend for a longer period of time, but at the same time, you sacrifice a higher number of pips. Is that making sense? All right. I'll see any other. Oh, sorry. Oh, sorry. I stopped sharing my screen by mistake there. I'll reshare it. Beautiful. Any other questions, people? Oh, there's one chat there. All right. All right. So there are no other questions there. Anything you would want to know on this? Right. Yeah, we've got your account history, the trade that you'd have taken, the profits you'd have made. Right. When you see a trade like this, it shows that I had put a trailing stop and I was stopped out. Right. When it's red, it shows that my trailing stop was hit. Let me see if I can get a blue one. I usually use trailing stop for my trades. That's why there are so many reds there. Like for this one, I managed to capture 70 pips here. All right. Okay. Right. When you see a green one like this one now, this green one means that I'd set a take profit and it was hit for this trade. The red one shows that it was this stop loss that was hit, but it was a trailing one, so I was in profit. All right. I don't know what else you want me to explain on the MT4 for the basics for now. Questions, guys? Am I making sense? Did you lose me? Let me see. All right. So, yeah, I don't know. Maybe if there are no more questions, maybe we can end this session. The bulk of these other items on the MT4, or the bulk of them, especially these here, these indicators, these analysis tools. We'll look at them more, each one by one. When we look at technical analysis, what does it mean? What these lines, these indicators, when we say we want indicators that show us trend, all these ones, they show us trend. What is their difference? What is their strength? What is their weakness? How best can you use them? etc, etc. So don't worry about them much. We'll look at them in greater depth, one by one, showing you how things go there. All right. So I don't know. Any questions, comments, queries, suggestions, subtractions, anything? Guess there's nothing. All right, so maybe I should stop sharing my screen. If there are no more questions, then maybe we can just chat. If there's anything else, if there's need to go back to sharing my screen, I'll gladly do that. Magnanima says, go Warriors, go. Yes, go Warriors, go. The match is starting in about 50 minutes or so. So guys, do we close the meeting? Any questions? Anything? How much time is left? We still have quite some time. We still have quite some time. But
I just joined, but well, I think you may continue with what you're doing because still I'm behind. It's just my first time. I just saw the meeting link and decided to join.
Oh, sorry about that. You missed the better part, but I was recording the meeting and I'll upload it on YouTube just as soon as I'm done.
Okay.
Mm-hmm.
What will I be looking for when?
I'll put the link in. I'll put the link in the group when I'm done, and then you can just go to the video on YouTube. Is that all right?
That's all. That's all right. Thank you.
That's beautiful. All right. Rangarai says maybe you could give examples of calculations on leverage, pip size, pip value based on different. Okay. Maybe you could give examples of calculations of leverage, pip size, and pip value based on different leverage amounts. All right. The pip value will always be 0.01 will always mean that one pip is equal to 1 cent. All right, sorry guys, I have a phone call to take here. Sorry, just a minute. Hello? Yes.
Okay, to take on from where he left,
All right.
can you hear me, guys? Can you please confirm with saying yes? Can you confirm saying yes? Okay, yes, good. So with the pip value, okay, let me try to. hmm, from here. Okay, I need Taylor to assign me as host. Can you please assign me as host? I will demonstrate something.
All right, that's all right. That's all right.
Can you assign me as a host?
Done.
All right, okay. Okay, just a moment. Oh, I need to share screen. Okay, can you view my screen, guys? Are you viewing my screen?
Yep. Okay, I can see it.
All right. I'm looking for Microsoft Word because I need to write these things so that everyone understands it. I need to write it down. How best can I get this? Okay, just a moment. Okay, let me do this. I need to get my documents where I can write something. Oh, where are my documents? Oh, just a moment. Okay, the on a very first note, the amount I need to do this. How best can I? Okay, I need a new good. All right, so here we are. Just wanted to look at something here. First of all, I'll look at the PIP. A PIP, right? A PIP is the I hope everyone can see my screen. Let's say we have a Euro USD with this value, which is 1.9550. Right. Everyone can see that. Can you see that, guys? Can you please confirm with a yes? I need to be sure that we are on the same page. Everyone can everyone see that? Uh, are we still together here?
Yes, please.
Okay. Are we still together, guys? Can everyone see here? Yes, okay. Good. I'm receiving the messages. Oh, damn. We're only left with 10 minutes. So let me just explain this. But anyway, this is you can spend the whole day trying to figure out this thing. This is just a simple thing, which to some extent average, it gives you like you feel like you have a bigger amount that you can operate. It gives you a screen. Okay. Yes. Something wrong when I share my screen here. I don't know what is it. Something is wrong when I share my screen here. I'm not sure what is it. Anyway, but I hope everyone can hear me now. Uh, as I was saying, a leverage, if you have a small amount, a leverage will assist you to some extent to help you feel like you, okay, someone is saying, Tazim is saying audio is better. How about now? Is it still the same?
It's better now on my side.
Okay, Ranga is saying it's fine. How about others? Can you please reply with a text, not a, okay, that's good. Don't reply with a voice note, because we are recording this session and we are going to upload it on YouTube. So like what I was saying, a leverage, like in some instances, if you can say maybe you deposit you deposit $100 account, make a deposit of $100 account on a leverage, let's say 1:500. That's your leverage. It means with this leverage, it means you are in a position to control an amount, which is the amount which you can control in your trading account. It will be 100 times what? It will be 100 times 500, which is some extent is how much? I'm used to calculating difficult maths as compared to these ones. How much is that? Someone to assist me. 100 times, I think it's something like how much? 50,000, 5,000. Yes, times 500. Okay, 50,000. Yes, it's 50,000. So it's 50,000. So this means that in your trading account, we have an amount. We are able to open trades which are equal to or approximately, which can be held by an amount which is worth around 50,000, but you don't have that 50,000. You only have, you only have $100. Even from the commercial perspective, a leverage is simple like the borrowed equity. Or when you look at the leverage, you are simply talking of something like yielding ratios. I know I'm making sense to others. So it's like the broker borrows you uh, this deposit which you have done, this 500, which is your leverage. So meaning to say, in your trading account, you are able to control a maximum of 50,000. Meaning to say, you can open, even if you have $100, you can open as many trades, as long as your 50,000 is still valid. But you cannot open only $100, let's say, using lot size 1, and then you open maybe say 50 trades. That won't be ideal. That won't be ideal. But you can even open 10 by 0.01 trades. 0.01 trades. So in simpler terms, a leverage is like a borrowed capital. You have your small capital, but since trading forex requires a large maximum deposit, so the broker borrows you that leverage, because leverage, like I said, in a commercial perspective, it's a borrowed capital. If we talk of the degree of leverage, I hope it's making sense before I move on to PIP. So leverage is like you are borrowing capital. So sometimes they say the higher the leverage, the higher the risk, right? Personally, as for us, we use leverage. We use leverage 1:200, and the maximum 1:300, so that we limit our risk exposure. Because high leverage also kills. And then lower leverage is good. as a beginner, you can survive using a low leverage. So someone may be tempted. I remember on my first real account, I used 1:800. That was leverage which I used, and I finished my account on something I couldn't understand what was going on until I came to understand that higher leverage kills. Okay, so there's some charts here, 50 minutes. Okay. All right, so I'm only left with 2 minutes. Guys, okay, so let me explain the PIP. Or when we talk of a PIP, the PIP is the fourth decimal. Like if you check here, it's 1.9550. So if this currency moves to 1.956, all right, let's say if it moves to 1.54, you see here it moved from 0 to what? To 4. This is a move of just 4 pips. Because when you talk of pips, you're looking at the fourth number after the decimal. Fourth number after. Sometimes there is this 51. There's always the 51 here, but you always, when on your side, you always take into consideration the the 5 significant figures. On a currency pair, when you talk of 5 significant figures, we're talking of 4 decimal places. That is 4 numbers after the comma. So this one from 0 to this 4, this represents just 4 pips. So if you are using 0.01, I think this is a very important thing. Unfortunately, our time is limited. So using 0.01, a move of 4 pips, like what is happening there in that currency, a move of 4 pips and represents, or to some extent it refers, like I say, it refers 40 cents, or it means 40 cents to some extent. It means 40 cents because one pip, if one pip moves, if it moves on your direction, it's a plus 10 cents. If it moves on a negative, it's what? Minus 10 cents. So 4 pips will give you 40 cents if you're using 0.01. If you are using 0.02, it will give you 80 cents and so on. Meaning to say, when we say it reaches, when we say it using 100 pips, it moves 100 pips, like what we always say with our signals, they don't move 100 pips. It's rare. It means we expect, if you're using lot size 1, we expect a loss of $10. That's the loss figure. So if it 0.01 moves 100 pips, it means it has moved just $10. So how much time is left here? Okay, I think I'll put more emphasis that on the group, because right now our time is no more. I'm trying to flip my screen and take and see the charts. Here I am. We can continue in the group. It's fine. Okay, guys. So your mic. What's wrong with my mic? Okay, guys. Thank you very much for attending this session. So I hope